Governor, you referred to some reverse swings coming your way. But, a governor who plays with such a straight bat, it's difficult to, instead the bowler gets hit out of the park. But I have a tough job on hand because the governor is sitting with me and I'm been told to watch the clock because there is a time constraint. So let me be as quick as possible. Governor, my first question to you is, India needs to, according to RBI's own research paper, India needs to grow at about 7.6% annually over the next 25 years to become a developed nation. Now, to fund that kind of growth, the financial system has to be well capitalized. There has to be a lot of new financial institutions also coming in of all shapes and sizes. Given that background, is it time for the RBI to shed its hesitance, or I should say reluctance, to allow business houses, private equities, venture capital funds to have larger stakes in banking entities? Your views?
You see, banks are different. We have articulated on this issue a number of times. Banks are different. They're different from other businesses. Experience world over has shown that real sector companies, when they enter the banking space, there are potential conflicts of interest, and also the issue relating to related party transactions also is a major issue. And we had in our country, we had several private banks earlier. Of course, I'm not going into the issue of bank nationalization, why it was done and what was the outcome and all that. But there are there are potential conflicts of interest. And experience world over has shown that it will be very difficult to, monitor or to regulate the, to sort of prevent the related party transactions. So the risks involved are very high. So therefore, world over, although there is no specific bar on, take the case of United States, for example, or take any other country, emerging market economies, it has not been done. And there are good reasons why it has not been done. So far as India is concerned, the banking penetration has been quite wide. Today, the number of banks, the number of bank branches have become less relevant. I will not say irrelevant, but they have become less relevant. Because technology is achieving that for you. The reach is being achieved through technology. The reach, the customer reach and the reaching the, the far-flung areas is being achieved through technology. It is also being achieved through several new business models. Take, for example, the BC model, the banking correspondent model, or the handheld payment equipments which they carry. So therefore, what India needs is not proliferation in the number of banks. What India needs is sound banks, healthy banks, well-governed banks, which we feel will be able to mobilize savings throughout the country through technology, which will also be able to meet the credit requirements throughout the country through technology. And you have new players, especially in the NBFC sector, who are entirely, digital lenders, for which the Reserve Bank has come out with detailed guidelines. Having said that, I would like to say that we are open to receiving new applications for setting up universal banks, and as and when an appropriate fit and proper application comes, the Reserve Bank will not hesitate. I am not implying for a moment that the today's number of banks is enough and no more license will be granted. That's not, by any stretch, I am not suggesting that. All that I am saying is that if applications are received, we will certainly examine and take a call.
But at this point, your RBI is ruling out entry of
At this point, there is no thinking in that direction.
Right, right. Your predecessor, Mr. Subbarao, in his book, both of you have worked both in the government as well as the RBI. Now, in his book, and I quote him, he says, there is little understanding and sensitivity within the government on the importance of central bank autonomy. He also wrote that he was invariably discomfited and annoyed by this demand that the RBI should be a cheerleader for the government. Now that you have spent 5.5 years, most in RBI, the central bank governor, and especially it is important because you came in at a time when there was a huge tension between the two institutions. What has your experience been, and how do you respond to the fact that there is always this demand on the RBI that you be a cheerleader for the government?
No, nobody expects RBI, at least I am saying from my experience, nobody expects RBI to be a cheerleader. I have had no such experience. And the coordination between the central bank, that is RBI, and the government during crisis times like the COVID, were, I think, very smooth, and it was the coordination and cooperation between the fiscal and monetary authorities which ensured that our economy revived, and revived very fast, and revived stronger in the aftermath of the COVID-19 pandemic. There have been differences of opinion, because differences between fiscal authorities and monetary authorities, between government and central banks, are inherent in the system. There are bound to be differences because it is inherent. But what we have done is to sort of discuss this directly between the government and the Reserve Bank, and whenever there are differences of opinion, they have been internally discussed and they have been resolved.
Right, right. Now, on interest rates, the invariable question on interest rates, the minority view in MPC was that as interest rate trend downwards, the real repo rate goes up, so long as the RBI holds the line. Second, growth may be sacrificed on account of interest rates staying higher for longer. Then there is the Fed chairman saying the other day that he will not wait till inflation reaches the 2% level. We also heard a BIS official saying that while inflation target should be a guidance for central banks, it should not become an obsession. Now that you have already said repeatedly that you are focused on a 4% sustained inflation rate, but that is not visible at this point of time. So would RBI be open to reconsider its stance?
You see, first thing I want to clarify is that BIS report, quoting a certain BIS official, he has been actually quoted out of context. When he said that, what was that sentence you said?
That, while interest rate should be a target should be a guidance, it should not be an obsession.
Yeah. He said it in a different context. I have read that full article. And he said it in a different context. What he meant is that just because you reach the inflation target, it doesn't mean that you start cutting rates. He was saying it from that perspective. So the first part of his sentence says that, the target is not very sacrosanct. It doesn't mean that once you,
Yeah.
So therefore, what he meant is that just because you reach the target, don't start cutting the rates. So he was saying in a different way altogether. In fact, I would suggest that that article is read in totality, because what he is arguing in that article is exactly the opposite. He is saying that inflation targeting is very important and central banks should stay the course. Now, with regard to growth, coming nearer home, with regard to India, with regard to growth sacrifice, we monitor the growth numbers very carefully, and I have said it on a number of occasions, because the law in our country, the Reserve Bank of India Act, says that Reserve Bank is mandated to maintain price stability, and price stability in terms of maintaining inflation at 4%. So we are mandated is to maintain price stability, keeping in mind the objective of growth. So in all our monetary policy decisions, growth aspect is always kept in mind. And I can say that even with the current interest rates, the growth in India has been very robust. Last 3 years, the average growth rate has been 8.8%. 8.3% in the last 3 years. This year, our projection is 7.2%, and we are very optimistic that 7.2% will be achieved. In fact, the nowcasting team of the Reserve Bank, and it has been published in the State of the Economy Bulletin article which we released yesterday, the nowcast team of the Reserve Bank believes that the first quarter growth, that is April to June growth, is 7.4%, although our internal, what MPC said was that it is 7.3%. And we see even today, the growth momentum in the second quarter continues to be very strong. The fourth quarter of last year was 7.8%. The first quarter, the numbers will be released in the end of August. And end of August. So the first quarter of this year, the momentum of economic activity is strong, and we see clear evidence of that momentum being sustained in the second quarter also. So growth is holding steady. Now we have to therefore focus clearly and unambiguously on inflation. And this talk of, neutral rate, etc. In fact, another bulletin article by our researchers yesterday have shown that now that, that earlier neutral rate of 0.8 to 1% was immediately in the aftermath of the COVID pandemic, when potential growth was low. But now that the impact of COVID is well behind us, the potential growth is now gone up, and the neutral rate of interest is now pegged in the range of 1.5 to 1.9%. So even if you were to argue that the real rates are high, it's not so, because the real rates, the range is 1.4 to 1.9. And also the point is, I have said it again a few days ago, what is our target? Our target is inflation. And what are we supposed to keep in mind? We are supposed to keep in mind growth. We look at all aspects that are happening in the economy. We look at international developments. We also look at real interest rates. It's not as if we don't look at them. Finally, we take a call. The target is inflation. The target is not neutral rate of interest. So therefore, a neutral rate of interest, again, is subject to a lot of uncertainty. It depends on your assessment of potential growth versus my assessment of potential growth, or versus somebody else's assessment of potential growth. So target is inflation. Monetary policy has to be geared to achieve that, keeping in mind the objective of growth. Neutral rate, etc., are theoretical, abstract concepts that cannot determine policy in the real world.
Right. I'm
sorry for those long answers.
No, it's perfect. There has been a series of actions against NBFCs, banks, and other institutions for non-compliance. Are you worried about this overall culture of non-compliance? Do you think too many institutions are taking unacceptable risks?
No, let me emphasize, as I just did a little while ago, that it is not so. There are outliers. Totally, if you look at, we have about 90 odd banks. We have about 1,400 odd urban cooperative banks. We have about 9,400 NBFCs. Now, all these are lenders. If you put together, it's about 11 or 12,000 banks and NBFCs and cooperative banks also. Out of that, we have taken action against maybe 4 or 5 or 6. And after 6 months or after 8 months, when there is compliance, we withdraw the business restrictions which we have imposed on them. So action has been taken only against about 5 or 6 or 7 entities out of this universe of 11,000 odd financial entities. So therefore, I think it's not correct. I think I want to dispel that sense that Reserve Bank is chasing and going all out to is on a we don't play a 20-20 game. I mean, we are there in Test cricket. We have to be steady in our approach. We engage with wherever, and these are outliers. Let me very clearly say, these are outliers, very few outliers. Whenever we see such problem, our first effort is to engage with them bilaterally. We engage for months and sometimes more than a year also. But where we see that the compliance is not happening, or the compliance is slow, or it is not adequate, there we have to impose business restrictions, because the idea is not to penalize them. The business restrictions are imposed in the interest of the customers. Because if the business grows, when there is an inherent problem, eventually the customer is put into difficulty. So all our actions have been taken in the best interest of customers' interest. So therefore, we take action after months or after more than 1 year of engagement with the entities wherever we take. And these are only very few cases. Overall, the system remains very resilient and very strong.
Governor, the union budget is just about 3 days away now. Now, while the GDP grew at about 8%, over 8% actually in FY24, the domestic consumption growth is half of that, 4%. So, what would you like to see the fiscal authorities do on that?
You see, it's not proper for me to comment on the budget, especially because it's just, next week. So I don't want to comment on the budget. But so far as consumption is concerned, I would like to say that urban consumption has been doing well for quite some time. In fact, immediately after the COVID, urban consumption has revived very well. But I think in the last few months, we have seen rural consumption also to have picked up. And we are very optimistic about rural consumption because the monsoon this year is doing well, is expected to do well. Agriculture is expected to do well. The crop sowing so far has been very satisfactory. So therefore, the agricultural production is likely to be high, and that will put more hands in the hands of the rural people. Quite naturally in this season, and because of monsoon and because of good agricultural output, the demand on Narega has also come down. Then, so far as the FMCG sales, for example, the FMCG sales over the last few months in the rural sector have actually outpaced the urban FMCG consumption. So we are quite optimistic about the rural consumption, to have picked up. So consumption is picking up, and certain measures like, for example, the free rice scheme is leaving that much more money in the hands of the rural people to spend on their other consumption. And inflation, the whole idea of bringing down inflation is that to reduce the burden on the people, both urban consumers as well as rural consumers. So if you measure, today the inflation is at 5.1. So just measure, quantify, if the inflation goes to, let us say, 4%, that 1% difference and that 1% additional money which will be available, if you just try to extrapolate on that basis, how much of surplus will be left in the, disposable surplus will be left in the hands of the people, which they are going to spend on the economy. I think the contribution to the growth will be enormous. So therefore, inflation management, a stable inflation at 4% will be the biggest contributor to our GDP. And we are moving towards that. This latest print, which went up again to 5.1 vis-a-vis the earlier number of 4.75, was mainly caused by the vegetable prices. Past experience shows that they have been seasonal, but we have to see how this year plays out.
I want to just have a couple of more questions. Banks or financial entities exposure in unsecured lending, personal loans, even project finance, has come under RBI's attention because of rising bad loans. But if you look at the numbers in March 2024, loans to agriculture sector, the bad loans were the highest, and then came industry. Do you think, is there a need to explore raising the provision requirement for agricultural loans so that banks can price it effectively?
If I remember correctly, subject to correction, with regard to agricultural loans, the latest GNPA figures are about 6.5%. I think that was March 24.
24, yeah.
Yeah, it was about 6.5%. 3 or 4 years ago, it was 10%. So it has come down. And I would not like to comment on any specific sector, but I would just like to draw your attention to the expected credit loss framework, which we have, the draft of which we have put in place. It's a draft which we have put in place in the public domain. We are getting the comments. Based on that, we will issue the circular on expected credit loss. So when that circular is issued, it will address all such problems of, any higher NPA or risk build-up in any particular sector, not just agriculture, but in every, wherever it is visible. But today, as you are aware, the GNPA levels are at a historic low. The bank's GNPA is 2.8%. So far as the NBFCs are concerned, it is at about 4%. In fact, if you take out the, the NBFC loans which are under resolution in NCLT, etc., the, the GNPA is less than 3%. And, or around, about less than 3%. So therefore, I think overall, the problem of bad loans is now well contained. But we have to remain there. That is why, we keep on giving all those cautionary advice. It's not as if there is a big problem and we are worried and we are trying to deal with it. It is basically the current times are good times. We don't want the bad times to come back. We want the good times to last, and we want the good times, to put it in a metaphorically, we want the good times to become even better times.
Right. Governor, you love cricket, so this the question is that one of your favorite cricketers, Rahul Dravid, he loved playing test matches. Now, but as the RBI governor and given the volatility in the external world, you must be forced to play T20 cricket almost every day. How do you cope up with it?
Well, first of all, I would like to say that whatever, Anant Goenka just said all those nice things about me. But whatever we have been able to do, I must say very clearly that it is the outcome of the effort of the entire team at the Reserve Bank, the entire team in the Reserve Bank of India. I cannot corner all the credit to myself. We have a good, robust team in the Reserve Bank. So it is the entire outcome of the entire teamwork. So modern times have become much more uncertain, much more, there are new challenges coming every day. And so therefore we have to deal with it. I think, I don't want to be philosophical, but I think the principle is to maintain your cool. And I think the word Captain Cool has been mentioned about Dhoni. So the approach has to be a mix of Captain Cool, Dhoni, and Rahul Dravid's approach. But having said that, let me say that both the cricketers did not play to draw the game. They played to win the game, and I think both of them have won the game. So that's our commitment. That's our endeavor.
Finally, Governor, your this term ends in December. I would want to say whether are you open to another stint as RBI Governor?
I don't know, as December 10th is approaching, I think I'm increasingly confronted with this question. But honestly, I'm really focused on my current work, and I said it elsewhere also. I'm completely focused on my current work, and I don't think, anything outside that. So focus remains on the current work. And what will happen in the future, one has to deal with it as and when the situation arises. I mean, why do I sort of worry about that? Let me first focus on the ball which I am now playing.
Yeah. We'll invite a couple of questions from the audience. Yeah, Shobna.
Yeah, Governor, you spoke of private credit. So much like, when the fintechs came in and they were lending, the RBI did move to put in some rules because it is important to understand the interlinkages, especially of smaller units, because the banks must know who the other lenders to that client are. Otherwise, there will be one borrower will be borrowing from many lenders. So is the RBI working on some rules for private credit players, just like you rolled out rules for fintechs?
Thank you. Now, private credit, many segments of private credit are really under the control of the SEBI. And we are engaged with SEBI on all these issues. You have venture capital funds, you have equity funds, you have AIFs. So there are many segments of this private capital, and most of it is under the regulatory jurisdiction of the SEBI. So SEBI will take a call. But in each of these areas, whenever we have any ideas or thoughts, we share them with the SEBI. And we discuss with SEBI, and SEBI will have to come out with this, the required guidelines. But we are watching this, the evolution of this sector very, very closely. And as of now, there is no, whenever for example, the AIF, there were certain issues relating to the AIFs, both the SEBI and the Reserve Bank, we took certain measures, and we have issued certain instructions. SEBI has also taken some measures. Our endeavor is to ensure that all these segments play their important role. They have an important role. AIFs or venture capital funds or equity funds, HNI is giving venture fund for doing venture funding, startup funding. All these things have to be there, and they will grow in the years to come. So intention is not to stifle them or not to create impediments. Intention is to ensure that they function in a manner so that there are no undesirable spillovers or there are no undesirable, negative consequences so far as the overall financial stability is concerned. But most of it, as I said, is within SEBI's jurisdiction, and we share our thoughts with SEBI. I have also mentioned that we welcome, because this is a growing area, so we welcome any suggestions and or thoughts in this regard.
Yeah.
Good morning, Governor. Thanks for your address, and lucky to listen it today on a historical anniversary of a historical day when the banks were privatized 55 years back. Myself, Pawan Goyal, I am doing my PhD from IIM Indore. My question on your point about lagging in the deposit growth versus the credit growth. When you compare India versus US, when we see the number of banks taking the deposit in US being around 4,000 versus in India, how do you see that scenario is much different in India? Why India can't have a large number of banks taking the deposit, hence contributing into the deposit growth?
No, as I said, the reach is wide. We have Reserve Bank has, please sit down. We have, we have the small finance banks now, and the small finance banks are growing at a very fast pace. And there is also a framework provided for transition of the small finance bank into universal banks. They have to comply with certain requirements. What is the framework under which the Reserve Bank will allow the small finance banks to transition into full-fledged universal, full-service, universal banks? So therefore, the total number of banks in India, as I said, is about 90 odd. To that, you must add the urban cooperative banks also, because they're also providing credit to the bottom of the pyramid. And basically, urban cooperative banks are, what is called the bank of the, they're the banks of they're basically neighborhood banks. And the urban cooperative banking sector, I am happy to mention and report here that, again, thanks to the actions of, the coordinated action between the Reserve Bank as the regulator and Reserve Bank as the supervisor with the urban cooperative sector, the overall health of urban cooperative banks has improved. And in terms of various performance parameters. So therefore, US had a long history and of a large number of banks. India, I feel, number of banks is not the solution, because the corpus of domestic household savings is the same. So too many banks doesn't mean that the household's financial savings will increase. Household financial savings will increase because of so many other factors. I alluded to, some of these savings moving away from the banking sector to, other financial instruments. But of course, when it goes to other financial instruments, it does come back to the banking system in somebody's account. But the point is, the preference of households to park or to invest their savings is shifting to other areas. That is shifting from banks to other areas. So to come back to your main question, India, I think, has got sufficient number of banks. If there are new applications, we will examine them. And the point is, the household financial savings, there is a certain amount which will grow due to other factors. It will not grow because there are more banks. And in any case, we have the whole, universe of the urban cooperative banks and NBFCs, small NBFCs throughout the country, this 9,400 of them, which are meeting the credit requirements of the bottom of the pyramid.
And then the last question, please. Yeah.
Good morning. Sir, just yesterday we saw, one of country's largest crypto exchange. Half of their assets were actually hacked, 230 million of it. Crypto, sir, crypto. One of the leading exchanges lost half of their asset, 230 million. How are we looking at this? Does this has the potential to, cause a financial crisis in the crypto world? And sir, separately also, the June WPI hit around 16-month high. CPI, again, like you mentioned, because of food inflation was at 5.06. Does this mean that, the elephant is not going to the forest and we will have to, in FY25, do you rule out the rate cuts?
You see, with regard to this crypto, I think I have articulated sufficiently in public domain earlier. The Reserve Bank's position remains the same. So I don't want to add anything because I guess, I suppose all of you would be aware of the Reserve Bank's position. What I have been articulating, that position remains the same. And we see it as a big risk to financial stability, this whole cryptocurrency thing. I have nothing more to add. With regard to WPI and its spillover and its impact on the CPI, we are very watchful. And WPI also, the food component has gone up. So it is the food inflation today which is the main cause of, which is drawing our greatest attention, because that is actually giving the push to the headline numbers, because core inflation as well as fuel inflation are quite low. Core inflation is 3.1%. So therefore, WPI and its spillover, we are very watchful of that. Food inflation is the worry. And you mentioned, you asked about the elephant. The elephant is overall moving towards the forest, but it's taking pauses. And sometimes I think it's moving very grudgingly, at a slow pace. So the last mile is always challenging in inflation. When you are on a path of deflation, the last mile before reaching the target is always very sticky. The elephant is getting distracted from time to time, but it is unidirectional. It is moving towards 4%.
Thank you, Governor. Thank you for... we're running out of time. Thank you for spending time, and we're indeed grateful to you. As usual, you've been forthright and frank in your views. Thank you once again.
Thank you.